So the S&P 500 and the Nasdaq closed higher yesterday, while Bitcoin did attempt to push upwards. Right now we're interacting with around the $88,000 resistance zone, and I want to go through some theories as to what is going on right now. Along with that, we're going to go over the news and the technicals so you guys can be fully up to date with this market and what I personally think about it. That said, let's jump straight into it. So we can see the S&P 500 up 0.88% on the Friday close. We also have the old Nasdaq up 1.31%. Again, showing us that instead of panicking, we can take these dips as opportunity. Now, that's not to say that this is the end of this dip and we won't have some sort of bear market across all equities. But for me personally, right now, Nasdaq, S&P, and the all world, I am slowly buying every single day, DCA, while the market's open. I am also going to be doing the same thing for Bitcoin as well, just slowly accumulating while the market looks the way it is, and then just waiting patiently for a change in the tide, which I believe will come. But the most important thing is I can sustain this buying for many years. And that's the plan. So whatever chunk of change that I have, my supplementary income at the end of the month, that's what I'm putting into the market every day or every week or every month, right? It's simple. That's the strategy when the market is not bullish. I'm not looking for crazy liquidity events and crazy runs right now. I'm protecting my capital and I'm building up those positions. With Bitcoin, what I'm seeing right now is, it does seem that this area right here is very, very strong support. So far, we have really managed to hold the daily candle closes above $85,000, which I think is actually relatively bullish. I'm quite happy with that. However, there's many ways to see this. One could be a double bottom formation. Another could be saying, well, the more times we try on this support, the more likely it is to break. That's why I try to take my mind away from trying to figure out exactly what's going to happen, but try and apply a strategy that can work no matter what. So no matter what really happens here, if Bitcoin continues to fall, I'll continue to buy. If Bitcoin continues to bounce, right, I might then add more of my short-term trades. But I'll keep you guys up to date no matter what I do every single day. So make sure you subscribe to the channel. So right now, Bitcoin is interacting with this level, right? 88,000, which has been a very important level. Look, 1, 2, and now 3 times just in the last week, we've interacted with this level and we've used it as a support here and a resistance here. And we've used it as a resistance many times. So this is a very important level to watch, and I would hope that we bounced or pushed above it and flipped it into a support. That would be very nice here. Now, on the dead cat bounce theory, right? We still have quite a ways to go. We still have about 22% until we get to that 200 MA region, which is the confirmation of the bear market last time, right? Here, we had that push to the upside, retest the 200 MA. So we still have about a 22% move for Bitcoin here. And we're only a little bit more than halfway through the time, right, it took here to decide whether or not it was the end of the bull market or we pushed higher. Once we start to pass this time frame, it could be an idea to consider the bear market to be really starting. And guys, just to clear it up, when I say bear market, right, I think depending on how you define a bear market, in the stock market, a bear market is defined by a 20% pullback. So right now we are in a bear market for Bitcoin when it comes to percentages, the way the market moves, all right? We're in a bear market. We just have to accept that. There's not enough liquidity. There's not a lot of liquidity. There's no new excitement. There's no new retail. No one's searching for Bitcoin or altcoins. We are in a bear market when it comes to that percentage move. However, for me to confirm for myself and the way I move in this market for a prolonged bear market, or what we call a crypto winter, I want things like time frames to be ticked off, and things like retesting the 200 MA and getting rejected, for example, to be ticked off. So right now, I know that we've been in a moment like this many times. Even the last pullback right here, you can see from the day we made the low, from approximately there to here, it was about 52 days. So a very similar time period to here. And then we can see in the last bull market, this was about 100 days. If we go here, from here to here, 76 days, and then from this low to where we got rejected was 120 days. So I know, right, in the history of the markets that I've been in, it takes a long time to really know, or to at least confirm with what I look at and the data points that I look at, that we're in a crypto winter. Then when the crypto winter, I believe, starts, then maybe I switch my thesis and I stop going long, for example, on Doge, or have the lower leverage positions, and I start going short and holding longer term swing positions, but short. But that time will come, and for me, I'm in no rush, because I know if we get confirmation of the bear market, we've got then, you know, a long time until we re-break that same level. For example, 648 days from the rejection of the 200 MA to when we got to that level again, this bull market. And then a very similar thing here. We broke down around this region, and then the next time we touched it, 478 days. And then again, another 900 days, you know? So we have a lot of time. If we go into a bear market with history, we got a lot of time. So there's no reason for me to be, you know, completely switching my thesis every day, all of this. I just take patient, and I just watch the market and, you know, roll with the punches, right? So there's a few different theories around what's going on right now. And this might be a little bit of hopium for you guys. So pay attention. It's very important to understand these different theories. So according to Bull Theory, $7.1 trillion worth of US stock and ETF options expired yesterday. The largest triple witching event ever. Triple witching is when a quarterly market event that happens 4 times a year on the 3rd Friday of March, June, September, and December. On this day, 3 types of derivatives expire at the same time: stock options, index options, and index futures. Across the last 14 triple witching events, the S&P 500 averaged around 0.5% down on the day. Bitcoin has historically ranged between 6 to 9% around the triple witching period, with sharp short-term swings followed by stabilization once expiry ends. So expect volatility. It does not change the long-term trends, but it often creates short-term noise and liquidity moves. So these short-term noise is what creates this. So yesterday we had $179 million worth of shorts annihilated from the market, almost $80 million worth of longs, but the shorts really outweighed the longs yesterday in the liquidations. If we do take a closer look at the data, you can see $7.2 billion worth of shorts and $5.8 billion worth of longs. The market right now is expecting more downside. However, there are people betting on this upside, which generally means there'll be volatility. The last time we were upset with this was when the longs outweighed the shorts, and then that coincided with the big push, the big flush again that we had to the downside, guys. So pay attention to that data. All right. So many different ways to look at this. A lot of different hopium there and excitement around the year end and how things could change in 2026. So let me know what you think down there in the comment section. For me personally, accumulating the asset I believe in the most, which is Bitcoin, and then having a diverse portfolio with my stock ETFs, and then taking a look at the higher risk stocks like Bitmine and CleanSpark to give myself a little bit high risk, high reward, and then just waiting patiently for opportunities to accumulate XRP, Solana, maybe some other larger cap altcoins for the next potential run. And that's the plan, all the while using these bounces that we see here to make short-term profits in order to generate more cash flow in order to buy assets in my diverse portfolio. So that's how I'm seeing this market. I'll keep you guys totally up to date with everything I'm seeing, and I'll catch you guys in the next one. Peace.